There are rules when it comes to credit cards. And if you don't know those rules and don't understand them, you will lose each time, meaning you will end up carrying a balance on your card and it will cost you more money in the end. Thank you for joining me today here at Sisters for Financial Independence. My name is Catherine Agupjan, and here at Sisters for Fi, I cover topics related to money, motherhood, and everything else in between. In today's video, I am going to share a credit card lesson, and we are going to focus specifically on a credit card billing cycle. Understanding the credit card billing cycle will allow you to know exactly when you need to pay your card so you are not carrying over interest, which is costing you and your family money. As a mom, I get it. We all get busy. Surprise expenses can come up and the credit card balance can add up. But what we all need to do is to really understand when those due dates are for our balances so that we can pay it off correctly. Unfortunately, we are in what's called a high interest rate environment, and credit cards have variable interest rates. So right now, you might be looking at a high interest rate for your credit cards. And the more time passes when you carry a balance on your credit card, the more in interest you will be paying. This is hard-earned money that could be going to your family instead. Majority of credit cards follow the same billing process, but I would still recommend that you print out a copy of your statements and read through the fine print. Normally in the back few pages, you will see how they are calculating your billing cycle, how they're calculating your interest, so you fully understand and know how the credit cards work. It might vary and there might be some nuances, so make sure you understand it for each card that you have. So let's get to the visuals to understand how billing cycles work and what you will need to do in order to make sure that you are not carrying a balance and paying unnecessary interest. Let's take a look at the credit card billing cycle. Let's look at this graphic to see what that looks like so you can visually understand when and where some things happen in regards to your credit card billing cycle. So our first is just look at the time periods. We have January to February, February to March, March to April. Now for a lot of people, and yours might be the case, some of your billing cycle may not start exactly on the first of the month. And if this is the case, you can call up your credit card company and ask them to move the start of your billing cycle. Normally what happens is when you get your credit card and you start using it, that becomes the start of your billing cycle. And if it's easier for you to just understand the schedule, or if you get paid a certain frequency, it might be better for you to move your billing cycle to a time period that works for your money. Now, in this case, we have our first billing cycle of the year, January to February. And during the month of January, you're going to make charges. Say you're buying something at Starbucks, going on a grocery run. Maybe you're paying for a kid's copay because they got sick. That's usually the time of the month. So January to February, you're making those charges. At the end of your billing cycle, in this case, January 31st, your credit card company will issue a statement. For a lot of people, the statement balance can be viewed right away when it gets generated. If you just log on to your credit card account online, you can see the statement balance. If you are still getting paper, you'll see this a few days later. But you will see in that statement a balance. So your credit card company will tally up all of the transactions you've made in the billing cycle. And in that statement, they will tell you that your balance is X amount and you must pay that amount by a certain date, by the due date. Due dates for credit cards are normally 21 days after your billing cycle ends. And this is what's termed as your grace period, meaning for these 21 days, you actually have the opportunity to pay off your credit card balance without incurring any kind of interest charges. Now, they do say that you have to pay your statement balance by a certain due date, and if you do that, you won't get any charges, no late fees, as well as no interest rate charges. You actually also don't have to wait until this due date to pay the entirety of your credit card balance. If it's easier for you, you might split it up between two paychecks, so you pay half paycheck one and then half in paycheck two, as long as by this due date, you are at zero and you've paid the entire statement balance. Now let's just look at it for some examples. So this is again your credit card billing cycle. Just some numbers here. So you see maybe you've spent $20 at Target, $80 for groceries, $25 to get some prescriptions, and so forth. Again, everything gets rolled up, put into the statement, and provided with a balance of $280. Now you have 21 days to pay that $280. Of course, you can split it. So you are paying maybe $100 from your first paycheck and then $180 for your next paycheck, and then have it all completely zeroed out and paid for by the due date. If you do all of that, you pay on the exact due date and you pay in full, you will pay no interest. You will also pay no late fees, which is great. So you essentially just borrowed from the credit card company without having to pay them anything. I also want to highlight the current balance. So as your January billing cycle ends, you get the statement balance. But of course, the days roll on and you now enter into your next billing cycle of the February month. So February 1st to the 20th. And from here, you'll also be likely using your credit cards and charging new transactions. As each of these transactions happen, it will get added to your statement balance, which results in your current balance. So it's $280 of your statement balance plus any new transactions you have. The transactions here in this billing cycle will not have to be paid until your statement rolls up and then you get your due date sometime in March. Now, here's what happens when you don't pay the entirety of the balance of your credit card statement. So, same thing. You're getting your statement, but you only are able to pay $100. So now you owe $180. So you are carrying a balance of $1 to your next billing cycle. And this $180 will start accumulating interest charges. And here is something really critical for you to understand. Any transactions you make in the next billing cycle, as long as you're carrying a balance, will also start accruing interest. So if it's a Starbucks run, if you're getting some prescriptions, those will start accumulating interest until you've paid off this balance as well as the entirety of any transactions you make in the billing cycle. This is why oftentimes it can be very difficult to pay down your credit card debt if you continue to use it, because any new transactions that you make will start accruing interest, and each day that happens, interest increases. Now, in a separate video, we will cover how interest is calculated and why when you wake up the next morning with a credit card balance, the balance has grown and continues to grow. So this is why a plan of action is needed when you're wanting to pay down credit card debt. So for this example, it is very important that you figure out how to stop using a credit card and really focus on paying down that balance so that you are not accruing interest on new transactions. Now that we understand how the billing cycle works, what are some best practices we should follow to use our credit cards wisely? The first one I would recommend is to consider moving your billing cycle to a time frame that works for you and your family. You can call up your credit card company to do this, and what you can do is set it up so that the statement due date hits a certain time after you get a paycheck to ensure you always have money to pay off that bill. 2, don't wait until the statement balance due date to pay your bills. If it's possible and if you can, try to pay a little amount each time until the statement due date. That way you won't be waiting all the way until the due date and you won't be so overwhelmed by the large balance that you might have. 3, utilize auto payments to make sure your bills are paid on time. Now, as a mom, I know that there's a lot of things that we are juggling. And one of the things that can save you is to use the auto payment feature to ensure your bills are paid. Ensuring your bills are paid on time not only saves you late fees, but it's good at improving your credit score, which means you can save more money down the line if you are paying things on time. Remember that credit reports and credit scores love consistent on-time payments, and you want to be diligent when it comes to paying your bills on time like that. 4, never, ever use your credit card for cash advances. The cash advances interest works differently, and the billing cycle for cash advances works differently. In fact, there's actually no grace period when it comes to cash advances. The minute you take out that cash from an ATM to use, interest starts accruing immediately. So you want to be careful about using cash advances. 5 is to stop using your credit cards. Now, I know this is going to be hard, especially if you have been relying on it. Unfortunately, credit cards give us the illusion of extra income, which is why we tend to overspend. I have a whole bunch of videos here at Sisters for Fi, which I will link somewhere here, about budgeting so that you stay on control of your money and don't use your credit cards as a crutch for emergencies or so many other things. I want to re-emphasize that once you carry a balance onto the next billing cycle, you lose your grace period, and any new transactions you make will start accruing interest. Unfortunately, if you're trying to buy things on sale, tacking on interest negates the savings you are looking for. That wraps up our lesson on the credit card billing cycle. I hope this video has been helpful. Give it a like and share it with a fellow mom who is looking to truly understand how credit cards work. Subscribe to Sisters for Fi for more money content to help you manage your money better for yourself and your family. To understand how credit card interests are calculated, I want you to check out this video, which will likely save you hundreds, even thousands of dollars. And if you are really serious about getting out of debt, I want you to check out this playlist, which has a lot of videos, a lot of practical advice and tips to finally get out of debt. Thank you so much for tuning in to Sisters for Fi, and I will see you in the next video. Bye!